Netflix is the first big tech giant to report earnings every earnings season, and it's typically the one that we look at to kick off earnings season, especially for tech stocks. And on Twitter, I posted this yesterday that Netflix usually does set the tone for tech stocks for the entire season. And oh my, what a tone it's setting here, guys. Down 20% after hours after reporting their earnings. And as I stated in my tweet, this is pulling down the entire NASDAQ with it, down nearly 1% after hours after already dropping over 1% today. So we're definitely off to a rocky start here after this earnings report. And this comes when the market is already at kind of a critically weak point. So it's just kind of adding more fuel to the fire. In fact, yesterday the Qs, which is the NASDAQ, cracked the 200 moving average on the daily, which is typically a strong psychological level of support, if you will. And the last time this happened was actually back in March 2020. As of today, we're over 11.5% off of the highs, and now we're truly in correction territory. But here's the good news, right? We're long-term investors. We wait for opportunities like this. And if you're watching this video, it probably means you're interested in potentially buying some Netflix stock here after this dip. So I'm going to share with you some insights, some information from their earnings, some of my own analysis, kind of give you my thoughts on where we're at today. If you appreciate any of that, hit the like button and subscribe to the channel as well. So here we can see Netflix results on a year-over-year basis, and things aren't too bad. 16% growth year-over-year in revenue is pretty solid. Net income is up. Memberships are also up year-over-year. But then if you look at the negatives, there are a few concerns. One is that the operating income and operating margins, they aren't looking too strong compared to last year. Then you have the big elephant in the room, guys, the free cash flow, which was negative $500 million for the quarter. Free cash flow has always been a metric that investors look at for Netflix, because for the longest time, the narrative was that Netflix will never be able to generate cash on its own. It's always going to have to keep raising debt. It's always going to have to be, paying off debts and that kind of stuff. But last year, they gave us a little bit of a hint that, they are about to be free cash flow positive, but then you have this massive quarter of $500 million loss. So again, it makes investors question, can this business actually ever become profitable? Now, in terms of the subscribers that they have, they slightly missed estimates. They added around 8.3 million versus 8.5 million expected, which isn't too bad, isn't too big of a deal in my opinion, but it is the first miss since Q1 of 2021, so a few quarters ago. Now, in Q1 2022, they expect to add only around 2.5 million new subs, which is actually much lower than what they did last year, which is around 4 million subs. Now, when I was reading through their earnings report that they released, I was hoping to see something positive about share buybacks. Maybe they were buying back some shares to kind of help bring some value back to shareholders. But unfortunately, that wasn't the case either. They said that they reinvested back into the business. There were no purchases on their shares this quarter. And this was pretty much Netflix's report in a nutshell. They met expectations on revenue. They kind of missed a little bit on subscribers. The outlook for subscribers doesn't look too great. But then that cherry on top, that negative $560 million in free cash flow, that's kind of what's making headlines, and that's what has investors concerned right now. But that's the bad. There were definitely some good points that we need to point out here from this earnings report. So let's talk about that right now. Well, for one, Netflix actually announced a few days ago that they're raising prices in US and Canada, and although it's only, a couple of dollars, it'll have huge positive impacts on the company's top and bottom lines, because they have like 74 million subscribers in the US and Canada alone. And this just kind of gives them a little bit more, room to grow their free cash flow. Netflix realizes investors are going to focus on that free cash flow loss. So by doing this price raise just a few days ago, they can kind of refer to that now in their earnings and say, you know what? Yeah, free cash flow was down, but with this price hike, it'll pretty much address that for next year, and we should be good to go. They're so confident that they actually say in their earnings that they expect to be free cash flow positive for 2022 and beyond. And they also say that they plan to pay down some of their debt and keep it manageable while they continue to reinvest in the business. Now, the last sentence here is also very key. They say they will use any excess cash to return value to shareholders via share buybacks. So, this quarter that they just had was not the best quarter from a fundamental level. However, with investing, we got to look forward. We got to see what the business is going to be doing in the future, because the price right now already reflects everything in the past. And right now, I believe that investors are not properly judging what the future of this business looks like. It's actually looking like a pretty solid business that they can deliver on positive free cash flow going forward and, buying back their shares and all that kind of stuff. And after this 20% drop, it could actually be a very attractive investment right now. If the business can be kind of consistently growing, say between 15-20% roughly year over year, and just keep generating more cash, raising prices a little bit every few years, expanding to new regions around the world and gaining subscribers that way, this company has a long runway of growth. And because they have such a sticky product that consumers just don't want to cancel despite price hikes, I think they're going to be very cash rich in the future. So, I don't hold Netflix stock today, but this dip does have me interested. So I started digging a little bit more into some of the numbers, some of the metrics that I like looking at, and this is what I found. Based on one of my favorite metrics, the forward enterprise value to revenue, we can see that historically Netflix was around a 6.5x. This is before, any sight of free cash flow being positive. So that's what the market felt was fair for this. And since March 2020, this has been trading at around an 8x. So a decent premium from the norm, because the market saw that this was turning free cash flow positive. It gave it a premium. All stocks kind of saw a premium during this period. But now after today's sell-off, guys, it's not really reflected in this chart yet, but it looks like we're probably going to fall within that 6.5x range again, maybe even a bit lower than that. And personally, if it does drop below, say a 6 or so, right in the 5s would probably be ideal. This looks very intriguing for a multi-year hold. Again, this is a company that's kind of mature now, so you're not going to see like a double up or a triple up in a year or something like that. However, if we do see suppressed valuations like this, you have a solid business to really stand by that can continue keep executing, sticky product, growing, and eventually will be free cash flow positive quite nicely. All those things combined just make it a great potential long-term investment. From a charting perspective, Netflix stock has gapped down below the 200 moving average on the weekly, which is definitely a bearish signal. And this level, interestingly enough, was not even breached during the March 2020 crash. So there's definitely a lot of fear out there right now in Netflix stock, and it's down around 42% from its highs. So if you've been considering Netflix for a little while, this is the time to start digging in deeper, because I believe there is definitely value to be seen. Again, this is not going to be a stock that's going to 10x your money in a few years, but I think this can be one of those consistent compounding stocks, returning maybe around 10 to 20% annualized returns for the next few years. And I think it's actually in a position right now where it can outperform the S&P going forward. But anyways, guys, that's just my thoughts. I'm definitely digging into this. It has me interested at this point. And as of recording this video, I don't own any shares in Netflix. But anyways, if you're interested, if I buy this stock or my other thoughts are on other stocks, consider joining our VIP group. We have a Discord in there. You get access to it. Link description down below as well as a pinned comment. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.